double declining method, which is you multiply straight line with 2. It is 2 times the straight line method. So double declining method write off larger amount of the asset near the start of its useful life. Most frequently used accelerated depreciation method. And why is that? We're gonna tell you in our coming slides. So it computes annual depreciation by multiplying assets declining book value at the beginning of the year by a constant percentage 2 times the straight line depreciation rate, right? So let's explore this. So what is the useful life? Here is 5 years. So what is the formula for straight line? It is depreciable value divided by life. So we can also write it down, depreciation value multiplied by 1 by life. So the double declining method is using that with 2. So this is exactly the same. So we can find out the percentage for which you can depreciate your asset. So let me just remove it and we can find out what is the double declining balance here with this truck example. So life is for 5, answer is total is 100%, right? So let's talk about the yearly expense here. So you need to decrease the value of the assets every year by 40%. So remember, the depreciable expense would be asset cost multiplied by the percentage of the double declining phase. So remember, it is not like cost minus the salvage value and then multiply it with double declining rate, right? No, cost multiplied by the double declining rate. So where this 16,400 came from, we just remove it. It came here. Answer is 40% into 41,000, right? Similarly, so the asset is now reduced by 60,400. And what is the book value? So the book value will be 41,000 minus its yearly depreciation. Answer is 24. And the next year would be book value multiplied by 40%, right? So the next year would be this 24,600 multiplied by 40%, right? It is equal to 9,840. Similarly, right? So the important point is the calculation of last year depreciation. So we know that at the end the salvage value will be the book value, right? Because you depreciate, and the book value at the end of its depreciation useful life is 1000. So you write down 1000 here. So at the end the depreciable value would be, so you see at the end the value of the 4th year, the value is 5,314, and if you multiply it with 40%, what is the answer here? Answer is 2,126 approximately, right? But if we less this amount, answer would be let me just 5314 minus 2126. Answer is 3188, right? But remember, the value of the at the end of 5 years, the value is 1000, but your value would be 3188, and that cannot be possible. Why? Because the asset going to be replaced with salvage value, or can be sold after its useful life, $1000. So you just at the end, that's the trick here. So at the end, the depreciation expense is calculated as, you write it down, the 1000 value, the book value here. It is the difference between last year depreciation. Let me just clear this mess and then write it down here. So it is the last year value minus the salvage value, which is right. So this will go to yearly expense. So remember, the trick of calculating the double declining depreciation method, number one is it is 2 times the percentage of straight line method plus the last year depreciation is calculated as second last year book value minus the salvage value. Or let me just write it down here. So second last year book value minus salvage value. So there is no multiplication with the double declining rate. There is no other method, just you write it down the remaining book value, and that will go to the income statement. Right? Did you see here? Compare it. The depreciation expense for the last year is a little bit higher. The reason is the salvage value. So here is the explanation that is also written here. So final year depreciation is 431, just calculated as the end of year 4 book value less the residual value. So double declining method differs from other two methods in two ways. First, depreciation is based on asset full cost, not the depreciation cost, depreciable cost like cost minus salvage value. No way, right? The other two methods use this on their numerator, and the final year depreciation is the plug amount needed to reduce book value to its residual value. So here is the example here. So just pause the video for a while and try to find out the depreciation, okay? And at the end I'm gonna show you the answer and you match the answer accordingly. If there's still confusion, please do write us in our WeChat group. We're gonna discuss that. Here we go. Right? Okay.